Hey guys, and welcome to this amazing episode. I am so excited to be sitting here with you today having a conversation with John Adams, who is the Chief Economist for Good as Gold Australia, and also for Adams Economics. So welcome to this conversation, John.
Thank you for having me.
So I really wanted to introduce you to my community, John, because I've been tracking with you for some time, and I wanted to acknowledge you for your body of work, because I know that it's really helped people to understand more about economics, more about what's happening at a macro scale, with where we are today. So we're doing this recording on the 24th of August, 2020, and, COVID is the pin that popped the bubble. But I had been following you some time since around that 2018 mark. And I would love just your insights on, how you have been helping people prepare for what you saw coming way back then, and perhaps what was building up to that. If you could just share a little bit about your journey and what you saw and what made you really want to let people know and help them get prepared.
Sure. Yeah. So, so in a former career, I used to work in the federal parliament for a particular senator, advising on the Australian economy. So I've been looking at the Australian economy for quite a while. I've been doing economics for more than 20 years. And obviously I was having a keen eye about the amount of debt that was building up, particularly in terms of these mortgages. And I was quite concerned back in 2012-13 in Parliament, and just to sort of get a feel for what the political attitudes around this was. What I guess found was the banks are in full control of this country, and nothing was going to interrupt with their business model in terms of getting people heavily into debt. I come from an immigrant family. My parents were very anti-debt. They paid off their mortgage in 5 years. When I had my first mortgage in 2009, my wife and I, we paid it off in 4.5 years, like a $313,000 mortgage. So we saved 50 to 75% of our income. I was always told, if you get into debt, quickly get it out of debt, because if something goes wrong and you don't have a buffer, you can get into all sorts of financial trouble. And so probably about 2016, I was getting very frustrated that no one was openly talking about the household debt bubble, the property bubble, and I was seeing around me people signing massive mortgages, $600,000, $700,000, $800,000, $900,000 mortgages, and it just seemed insane to me that working class people signing up to this level of debt. And you look at the serviceability, a lot of these people could just afford it using interest-only loans. And obviously we saw through the Banking Royal Commission that there was corruption in the assessment process. So people who should never have received a loan were given loans. And the typical sort of things that happen in terms of a bubble. So in 2016, I was writing a series of opinion columns for the Daily Telegraph, independent commentator, and I decided to write a few articles about the household debt bubble and the enormous amount of foreign debt that we have. And then really from there, I just started, it just sort of has gone on a bit of a journey. Wrote a couple of columns for news.com in 2017. Then we did, and this is where this concept of economic Armageddon came from, this crisis that would come from the biggest debt bubble in Australian history. At the same time, we've got the biggest debt bubble in the history of the world. That's basically my central premise, central thesis, that we have this huge debt bubble both domestically and internationally, and there's nothing in economic theory or history that will suggest that it's going to be a benign outcome. So there's going to be some sort of horrific economic pain. And then in 2018, I wrote a 4-part series for news.com about economic Armageddon. The last part of that series was about how to prepare. So news.com asked me to write a 10-point plan of how to prepare for an economic crisis. So I had some 10 basic steps. Some of them were financial, some of them were around health, some of them were around spirituality and personal relationships, so looking at a more holistic well-being sort of framework. And then obviously from there, I started working with As Good as Gold. Part of my 10-point plan is around holding good money, gold and silver, and I've been buying gold and silver for a number of years. And then started doing a show with Martin North. In 2018, we did, I think, 35 episodes on his channel, Walk the World. Last year, we started a channel on YouTube called In the Interest of the People. And we've done a number of shows. And basically, the show is focusing on two key premises. One is it's an anti-debt show. And we talk a lot about the issues around too much debt, the debt bubble, looking at it from both the property sector, the macroeconomic perspective, in terms of what it means for the financial system as well. And we talk a lot about risk, because when you think about it at a very simple premise, why does a working class person sign $1 million mortgage? They do it because they don't think it is risky. Because if they thought it was risky, that they wouldn't do it. And so the level of systemic risk that's really in the system versus what people perceive, there's a huge gap there. And it seems to me that when you look at government, when you look at mainstream media and a whole host, and the banks and the chief chief economists of the banks and a whole bunch of other institutional voices who kept on saying, get into debt, everything's fine, property will always go up, nothing's bad's going to happen. Don't listen to those people saying opposite, because they're conspiracy theorists, doomsday merchant. I mean, every name under the sun, they sort of called me that. That's kind of been the journey. And, we've been educating people on social media, on alternative media. And some of the things I've been working on in terms of the research I've done has actually been reported on by the mainstream media. So we focused heavily last year about this proposed $10,000 cash ban, which is linked to this issue of negative interest rates. And so the ABC reported about that, and I had the opportunity to testify to Parliament on that particular issue, the issue around forced confiscation of bank deposits in terms of bail-in. Again, the ABC reported on that, and I've been at the sort of centerpiece around that particular issue. And so, we continue the work, and I've had the opportunity to speak to thousands of Australians, both on the phone, email, in person, etc. I've done obviously with COVID, it's been hard to travel around the country, but last year I was able to move around the country quite a bit, and people have heeded the message. I mean, I write a lot of articles. All my body work is on my personal website, adamseconomics.com, and people can read my work and scrutinize it and critique it if they wish. And but those who have come to learn that there is an issue with too much debt, before COVID, a number of them took action and fixed up their balance sheet and did a number of things that would give them better financial stability. And obviously, for those that didn't know of me or who didn't hear the message, we're seeing all sorts of problems happening with COVID-19. Now, when I talk about Armageddon, Armageddon was one of 6 scenarios. To be honest, I didn't forecast COVID-19. I didn't think it was going to be a pandemic or anything like that. But I knew that if a disruptive economic event were to occur, and you have too much debt and you don't have a buffer and you haven't taken a series of precautions, you're going to be in all sorts of strife. And, I've heard of horrific things already happening around suicide, around self-harm, drug use, small business owners losing their businesses, people losing their jobs, increase in domestic violence, child abuse, increase in divorce, etc. And from the data I'm looking at, we're going to see this process escalate in October. So we're talking today in August. The reason why October is important is that JobKeeper, the current version of JobKeeper will end in September. And then in October, we'll go to a new version of JobKeeper, which is a lower payment with lower eligibility criteria. And in that process, I've already heard anecdotally, and this is sort of confirmed with Martin North's data set, and we did a show about this the other day, where a number of businesses are going to shut up shop formally, go through some sort of insolvency wind-up process, and there's going to be a lot of job shedding as well. So you're going to see a lot more pain. And the government's own number says that we're going towards 10% unemployment by Christmas. And that's going to be quite horrific for a lot of people who are ill prepared. And one of the good things about Martin North's the data he collects and publishes, he has an index about mortgage stress, he has an index about rental stress, and he has an index about stress in terms of property investors. And and all three bases, he measures stress on a cash flow basis, cash coming in versus cash going out. And the level of stress among renters and people with mortgages is through the roof. And it's really gone through the roof. They were very high pre-COVID. They've gone through the roof during COVID up until this point. And I dare say we're going to see an escalation of this going forward between now and Christmas. And now I have to say, for my personal circumstances, touch wood, in the last 5-6 months, I have never gone to sleep once worried about money. Because I have no debt, I have a lot of gold and silver. My wife and I, now our work hasn't been interrupted, but we also took a whole host of precautions, prepaying bills and having supplies. And my whole objective was to ensure that with my two daughters, the routine wouldn't be interrupted. And there was stability around the household, and that's why owning a property outright, having no debts, and putting a number of reserves in place and a number of other things just to make sure that the family continues to function. That was central to me, and we've achieved that. And the only thing that interrupted for us was my oldest daughter's in kindergarten, and her educator got interrupted for a few weeks. But other than that, we've continued to operate like clockwork, and the children are happy, and children are good, and they haven't gone without for one day. And that was the objective that I had as being a husband and a father, and I've done that. And so I've been able to get through this process, and a number of the people listening to me have done so as well. And obviously, I would dare say to your audience that I think things are going to get far worse between now going to 2021. And if you're not prepared, or if you've never examined my work before, I've got a lot of public information out there, videos, articles, etc. And it's never too late to learn about this stuff and actually take action to improve your financial circumstances.
Yeah, fantastic. Thank you very much. I'm interested in a couple of things. You said before about sound money. And, this is a thing in our education on finance, and the narrative and what we're taught in the mainstream media about money and finance, that kind of thing. For the people who haven't got time, they've been head down, bum up, just learning, conventional thinking. Could you just share quickly, this is pretty deep, but the difference between, say, Austrian Keynesian in philosophy, and also, when you talk sound money, how you would, explain that to a kindergarten student?
Sure. So so for the purpose of this conversation, I'll make one clear distinction. Keynesians don't really talk about debt and what happens when you have too much debt, whereas the credit cycle, about when you have a boom and a bust, what drives that. Austrians focus heavily on the creation of money printing, interest rates, and when you have and through that you have too much debt in an economy. So that's why a whole bunch of Austrian economists could see the GFC coming in 2008, whereas a whole bunch of the mainstream educational system around the world is Keynesian economics, and a lot of people were just completely blindsided to the financial crisis coming because the Keynesian framework doesn't really acknowledge debt bubbles forming or anything of that nature. So that would be the core difference in terms of sound money. So basically, what we're talking about here is money that holds its value. Gold and silver has been around for 5,000 to 6,000 years. It's always been in demand. It's always maintained its purchasing power. And anytime you have a currency that's not backed by gold and silver, and we've seen multiple examples happening over the last 1,000 years, what tends to happen is that currency, and the Australian dollar is not backed by gold or silver. What happens is that the bureaucrats and the politicians create too much of it. It loses its value. Prices go up. Prices go up in response to the currency losing value, and then at a critical point, people lose confidence in that currency, and then you start to have currency crises, hyperinflation, etc. So it seems to me that we're going through that process at the moment. Just to give an example, Had you bought an ounce of gold in, say, the year 2000 in Australia, you would have probably paid around $250 an ounce. Whereas today, you're paying north of $2,800 an ounce. So, one of the key questions you have to ask yourself, how is it that in 20 years, the price of gold in Australian dollars has gone up more than 1,000%? It's not that gold is more valuable, it's that the currency, the Australian dollar, has lost enormous value because they've just printed huge volumes of it. And it's not just physical, creating to get more coins and more notes. It's the creation of digital money through the digital system, mortgages and credit cards and all of these sort of debt instruments. So where did all this money come from to be able to lend out? It was just created out of thin air. And all of that additional credit creation has led to the value of the currency falling. And so, whether it's, here in Sydney or down there in Melbourne, Australians across the country would say that the number one economic issue is the cost of living. And yet we have the government who continues to say we have low inflation. So, it seems to me that we've got this dichotomy of opinion between the people versus the politicians. And the reason why the cost of living is so exorbitantly high in this country is because we have a problem with the money, because they've printed too much, interest rates are too low. And through all this money printing and credit creation, prices have gone up, and middle class families are struggling to afford in terms of the basics, in terms of buying a house, or in terms of renting, in terms of food, childcare, transport, you name it. The government statistics says that everything's under control, whereas I would say that the people themselves are saying, no, we have a problem with living in this economy because it's too expensive, and it's too expensive because they've destroyed the currency.
Thank you. What's coming to mind now is Warren Buffett. So a lot of the people that are in my network would be in the share market. And I know that he was always anti-gold. And I also know that recently he made some changes to his strategy. Do you have any thoughts on that, or are you across that, or your thoughts?
So definitely across it. Interestingly, with Warren Buffett, his father was a huge advocate of gold and silver. For a long time, Warren Buffett has been in the stock market, focused on a lot of consumable companies. He did invest heavily in the financial system in terms of banks, investment banks, etc. But he owned a whole bunch of well-known brands, Coca-Cola, Gillette, construction companies, etc. that sold services or goods, and they were stable businesses with good cash flow, good profit. So and that's basically how he's made extraordinary amount of wealth, by finding points in the market when these companies are undervalued, and basically pouring a lot of money in and waiting for those companies to recover, and then holding them for the long term. So, and obviously, he's been asked about gold for a long time, and he's been very anti-gold. And obviously, in the last 2 or 3 weeks, when his company Berkshire Hathaway had to release their quarterly filings, it was revealed that he sold a whole bunch of US banks and used that money to invest in Barrick Gold, which is one of the largest gold mining companies in the world. So that was quite significant for someone who was anti-gold to now be investing in a gold mining company. And that was obviously, that filing was for the end of June of 2020. So what's he done in the last 6 weeks? Has he bought more Barrick? Has he bought other gold mining companies, silver mining companies, etc.? So I think that was quite significant in terms of, what I've learned in this process is, even with whether it's wealthy people or whether it's politicians, don't listen to what they say, look at what their actions dictate. And that gives you a better clue as to, what's their real thinking like. So obviously the fact that he's been buying gold would signify that there are concerns about the currency, US dollar, etc. And obviously he wants to protect his portfolio by having that sort of position. So I would say that one of the scenarios that I said that could happen with this with economic Armageddon was stagflation. Stagflation is an environment where you have low economic growth, high unemployment, but also rising prices. And in the Keynesian framework, that's not supposed to happen. So if demand falls and unemployment goes up because there's a lack of demand, prices should fall. whereas in the 1970s prices actually rose, which was the basically destroyed the whole Keynesian paradigm, then. And we had runaway inflation at the same time that unemployment was quite high and economic growth was sort of depressed. And so we're having this environment at the moment. So even though people may not be hearing about we've got a problem with inflation, people can definitely know when they go down to the shops, it's a lot more expensive. But if you look at the money supply as published by the Reserve Bank of Australia, and you look at broad money, the annualized growth, the 12-month annualized growth for broad money is the fastest since June of 2009. So, so we are seeing this process of, as unemployment rises, the money supply is rapidly growing, and whether the government wants to acknowledge it vis-a-vis the Australian Bureau of Statistics, the ordinary Australian understands that prices are not falling with COVID-19. Prices are rising, and so we're going to see the stagflation environment. And when we had stagflation in the 1970s, the best asset class that responded to that environment was gold and silver, and gold and silver went on a huge uptick. And those who were positioned in that sector, they did well out of that during that period. And so obviously I've been suspecting that the central banks were going to print huge amounts of money, and they have pre-COVID. And then in March of this year, the US Federal Reserve announced QE to infinity, which was there's no limit to how much we will print. And we've seen this huge surge into gold and silver because people are losing confidence in the currencies of their governments, whether it's the Australian dollar, the US dollar, the euro, the yen, etc. And I dare say that the gold and silver story is going to be a big story going into 2021, 2022. And that is one way of how people can preserve their purchasing power, by dumping dollars or assets denominated in Australian dollars and getting into precious metals, physical form. And that's basically what I've endeavored to do for myself. And with this Gold Australia, we've helped thousands of customers across the country, and we have international clients as well that we help.
Thank you so much. Okay, I wanted to ask you about a couple of things. We're seeing some news stories at the moment around the talk about stopping the creation of coins. Okay, so they're starting discussion in the media now about the 5-cent piece being phased out. We're also seeing ATMs being closed. So do you see this as a pivot to accelerating digital currency?
Yeah. So there is a move towards a cashless society. The cashless society is based on, I think, on two main premises. One is around negative interest rates. So this is something I've written about and spoken about, quite substantially. The International Monetary Fund in the last couple of years has written extensively about negative interest rates as well. And the problem with negative interest rates is, before we actually get into the problem, we should actually explain to the audience what is negative interest rates, because some Australians are a little bit unclear as to what this is. So basically, for example, if you've got a term deposit and you put money in the bank, maybe the bank will say, we'll pay you 2%. So by the end of the period, you have your principal, and then you get 2% interest. Well, when it's negative interest rates, by the time you take your money out, you have to pay the bank the privilege of have your money in the bank. And so obviously that makes no commercial sense. So a lot of people in a negative interest rate environment, their natural tendency is to take their money out of the bank and hold cash, in terms of physical cash, notes and coins. And so this is where the global agenda around a cashless society comes in, so that they can implement in terms of these negative interest rates. And so whether it is about taking away the ability to obtain cash through ATMs, or whether it's about removing the 5-cent piece of circulation, or even this cash transaction ban, which we were fighting last year, which was the currency restrictions on the use of cash bill 2019, and under that proposed law, which is still technically on the Parliament's agenda but hasn't passed yet, that would make it illegal to do a cash transaction above $10,000, and the government argued this was about the black economy and illicit activity, and to me that seemed completely bogus. It was all about negative interest rates. So you have that dynamic, and then obviously you have this issue around what's happening in China around effectively the social credit score system. So if you have digital currencies, cryptocurrencies, whatever the case may be, when I say cryptos, I mean a government-oriented cryptocurrency, then obviously they have a lot more control over your behavior. So if you don't want to take a COVID-19 vaccine, well, we'll knock off your money. Or if you're not going to do this activity or that activity, well, we can actually control you by controlling your money, controlling your wealth. And so this has a huge implication around civil liberties. And one thing that I think I've noticed is that probably in the last 2 months, a lot of Australians are waking up to the fact that COVID-19, now, again, some people think that COVID-19 is extremely serious. Now, I don't deny that there is a virus. Some people have had negative effects to it, but the risk of the virus to society at large is a lot lower than what we've been led to believe. And so obviously, there's this awakening that Australia is changing from a country that is based on freedom and liberty and individual rights to a more authoritarian type of government, and that has concerned a lot of people. And obviously mandatory vaccination and a few other things like that has concerned people. And obviously down there in Victoria with you, with all these lockdown laws, it's I'm here in New South Wales today, and I'm able to travel freely. And there still are some restrictions compared to pre-COVID, but it's nowhere near what the Victorian sort of situation is. And obviously a lot of people in Victoria are suffering quite heavily about not being able to get out of their house for more than 1 hour and to live the life that they want to live. And the question is, well, why is it when the evidence is clear that I mean, initially they said that 150,000 Australians would die if we didn't do anything about this, and Imperial College from the UK said that 40 million people would die worldwide, and those forecasts were completely bogus. And yeah, I don't think that the lockdown, and even actually the World Health Organization has come out and said the lockdown is completely unjustified. I mean, the cost of locking down from an economic, social, and public health perspective far outweighs the benefits, and that's why the WHO said do not lock down on either on a national or regional basis. And so yeah, so I think the civil rights conversation is front and center for a lot of Australians or people around the world, not just in terms of in the COVID conversation, but obviously when it comes to economics and money and cash and the ability to do what you want when you want to do it. These are central themes which are becoming more prominent, and I think they'll become more prominent going forward as the central banks and as the governments try to push for this cashless society.
Thank you. You said before that people are starting to pay more attention or wake up to a few things. And I think that social media has got a big part to play with that. People are not just listening to the mainstream narrative now. There's an increasing number of people following shows like yours and Martin's. And, there's a debt of gratitude there, because I think having, information that is additional to what people can access, education that's additional to what people can access, which is, controlled and selected and curated. We've been living in a construct, and to have other resources where people can just, go and research and, compare is really, really important. I think the biggest challenge for people has been that they're just so busy that they haven't made the time or haven't made the space to be able to research or find out for themselves. So they'll get home, kick their shoes off and flick the television on, and that's the truth. And what's great is that there are places that people can go to get great information, and yours is certainly a go-to and has been for me since 2018. I think I shared with you before when we were off camera that I've been directing my community to your stuff for some time. I know we haven't got a lot of time today, so I have got some more questions, so maybe we do this again sometime. Sure. I just want to thank you for lots of value in a really you pack a punch. You pack a punch on. So thank you. If people want to find out about that body of work that you referred to and start making, this is one of the things that I am saying to people every single day, to allocate 15 minutes to half an hour to do some research on a subject or a topic that you're unaware of. Like, it could be about precious metals, it could be about digital currency, it could be about history, it could be about how the Bank of International Settlements works, or how the central banks work, or what does the IMF really do, and start to actually join some dots and figure out how the world works. And I know that you're a valuable resource in that space, John. That's the sort of stuff I'd love to perhaps share some more on with you at another time, or if we can share with my community. But in the meantime, thank you. In the meantime, if people want to find out more about your work, where will we send them?
Sure. Yep. So my personal website is adamseconomics.com. There's, 30, 40 articles that I've written, mainly about economics, but I've got a few other things up there as well. So people can scrutinize that. I do send out a free newsletter. So when I think something's important to communicate, I have a few thousand people that I send an email out to, and sometimes people respond. People can go to my website and find my email address. They can email me, contact on social media, and happy to talk on the phone and engage. And if I can help people, happy to help.
Yeah, that's great. So I have had people come to me over time, Tanya, tell me about precious metals. How do they work? Where can I go? So it's great for me to be able to introduce you to these guys so they can put a face to the name too, for where I've been directing them here. Great. Good. Okay, thank you so much. Have a great day. Again, I really appreciate all your insight and research and the work that you do, and also look forward to talking to you again and doing this again, if that's okay with you.
No problems. Thank you for having me.
Okay, thanks, John.